The following is a conversation with Daniel Mo. Daniel is currently the managing director at Opus Momentus, a financial services company involved in trading and investment management. He has a rich industry background with over a decade of experience trading derivatives and managing financial portfolios. In our conversation assured us he is a genuine and honest professional you can trust. And now, dear friends, here is Daniel Mo.
Hey, guys. Today we're having here Daniel Mo, our fourth guest on our show, the TradePod, where we enable traders around the world to have to spread their ideas and to learn from each other. And we're super excited from today's guest, Daniel. Daniel, he's been trading for a long time right now, and me and Alan were sure that he can provide our audience with an incredible amount of value, an incredible amount of new ideas and what to do next. So we're happy and excited to have you here, Daniel. How are you
Thanks for
today?
having me.
Welcome, Daniel.
How you doing? How are you guys
Thanks,
doing?
Great.
thanks for being here.
Thank you. Thank you for having me.
We're excited to have you here as we have already presented. But I want you to present yourself to the audience so they will know who's our guest.
Sure thing. So I'm a proprietary trader. What that means, I work for firms that provide capital and they trade internally. They would hire traders such as myself. We trade the capital within the firm, and we can develop our own strategies. And as long as we're happy with what we're doing and they're happy with how we're performing, then the partnership goes on. That's essentially how proprietary trading works. And I've been on this path for over 12 years now. Prior to that, like many people starting up trading, I've been dabbling in some currencies, dabbling in some CFDs. But my specialty right now is treasury bond futures. So I've created my own strategy, which has been refined over the whole time that I've been working in a prop firm environment. Now, essentially, I can take that to any firm, as long as we have the right agreements in place, and I can just do that.
Really?
Yeah. So proprietary
Sounds
environment,
incredible.
yeah, it's different, right? When you're trading on your own, yes, you can do that, but what a prop firm enables you, obviously, the capital backing, if they know that you're a performer and they like you, and they set strict parameters, right? Say your daily drawdown limits, etc. And majority of prop firms, the ones that I work for, right, they're more discretionary traders that you can go in and do every day. You come to an agreement with how you split the profits, how much backing they give you, what products, etc.
This is a private platform, right? It's not a publicly known platform because
No,
you know.
well, it's a public, you can see it as a company. However, the money that they back you to trade with is private money that's inside the firm. So whoever owns the prop firm, they fund it, or the partners that own it, they fund it, and they hire traders. And then the traders, usually we enter a profit split agreement and you get a percentage of what you make. And the company gets the percentage of what,
Let me ask you a straight question.
Mhm.
What's the benefit of like having a platform? I'll put you in the shoes of the CEO of one of the platform companies, named, I don't know, Daniel Mo. All right, let's hypothetically say. What's the actual potential in having a platform business? How do they make money? What is their
They
business model?
essentially, the aim is to discover very successful strategies, very successful traders with these strategies, right? That
Mhm.
will basically outperform any financial product you can invest in. in the markets. And if the funding cost of these prop firms, for example, for them to come up with the money to back your trading makes financial sense, you're obviously outperforming the cost of their money. So for example, right now, say interest rates are at 5%. So if these people are happy with a steady interest of, say, 10%, those people are happy to then stick that as long as whoever's managing that prop firm knows what they're doing, right? And the money is not at risk of, like, say one trader blows up and loses a big chunk of money, right? Then it's the prop firm's job to manage that risk, to say, okay, well, whatever I allocate to this guy, it's managed. You know, there's a daily stop and also a percentage. What percentage is the
which is a hard stop, like within the company. So
yeah.
there is an issue with the margin call, like publicly known platform companies. We're not going to be mentioning their names here, but you can look for platforms online. But they have like time margin calls, and I know from my experience with prop firms, which is incredibly hard. You need to be incredibly good to pass the challenge. Breaching the rules like will cost you money. And if you pass the challenge, you get incredible buying power to trade on, which is an incredibly powerful starting point to start with. But what I actually want to ask you here is, how do you manage your risk and you don't breach the rules? Because this is a tough game. And even though after you pass a challenge or after you get to an agreement or something else, I don't know, you decide, how do you actually manage yourself within the actual game of prop firms? How do you keep their money, and how do you allocate more and more wins over time? And how do you get consistently, and how do you enjoy the component profits from the previous day in order to take advantage? This is a
I
stack of
think
questions. Let's break them down. Let's break them down.
there's a lot of components there. I'll start with, why would you get into trading? It needs to be, I think, something that you're passionate about, because
Of course.
any trader would know if they're experienced enough, right? It is not an easy journey to be a successful
course.
trader. There's so much pitfalls, many hours just sitting there, studying the screen, studying the markets, right? Finding your way, from a person that learns from scratch, right? Before I went into a prop firm environment that has, some degree of guidance, and they like what, you're trying to weed out your bad habits, increase your wins and things like that, right? That guides you through. But that journey, I can say it doesn't end, right? I learn every single day. So you got to be passionate about this and want to do this on a daily basis.
There is a joke that somebody have told me 1 year ago, that in order to be passionate about trading, you need to love two things: candles and Japanese. So it's actually what makes you to be passionate about, like about trading. Yeah, but I'm with you. I just want to that
So
popped up to my mind.
it pretty much starts from there. Now, and then
From candles
you
or the
need
Japanese?
Japanese. Why Japanese?
Because Japanese candles.
Well, that bit is a myth, maybe. I don't know much Japanese.
Yeah, it's a myth. It's a myth. It's a myth. It's a myth.
But you're definitely, for me, yes, I'm a candles chart trader, with, I think most people would be. I feel like, yes, that's your starting point, right? You learn the basics, you have a passion for it, and then when you've got that under your belt, you develop a system. And that's basically a trading plan, right? That is the thing that it all goes back to, is if you have a successful trading plan, now the plan would include, what do you trade, what time, how do you get in, how do you get out, where's your stop loss, all of that. And that is what's going to guide you the rest of the way. And you will be modifying this plan as you see fit, according to market conditions, according to what you want to trade, and according to your personal traits. Like some people And you got to work that out as you go. Some people are very impulsive. They like to get into trades, into the action, in and out all the time. Whereas some like to sit back. They analyze for longer and they do less trading, right? But the end goal is you have a system that just works. You know where your stops are, and it needs to have an edge, right? So that's what keeps you in the game. Whether you're trading in a proprietary environment or trading on your own, any trading, you will need a successful plan to be successful in the long run. Otherwise, like that's gonna put you like somewhere down the line. So yeah, so that's what keeps you in the game. You need a system. Now, I can say there's a lot of online prop firms, right? I'm not going to comment on where majority of the money comes from, but you need to think about the success rate of a trader, which is quite low. Someone that can trade for a living and make money in the long run is very, very low. So these prop firms that online, right, you pay a sign-up fee, right? They give you a account and you start showing them what you've got. You can imagine, you know, out of 100, more than 90 of them are going to fail. And they either then try again and again and again, or, you know, somehow they pull through. And after that, hopefully they have a system that works and that can adapt to any market condition in the long run. That's the traders that makes the most money trading. So what a prop firm tries to do is essentially get to that trader and keep them, right? Give them what they need, make sure their system is sound and they know how to adapt, control that risk of, you know, if they're going off the rails, then they got to reel them back, right? So that's essentially what a prop firm needs to do. They need a trader to be able to cover all the risk that they might put a little bit of risk per trader at the beginning, and they scale the good ones as they go. So you might be only making lunch money. That's kind of what I did. When I first started in the prop environment, they essentially tell you, look, you're going to go maybe a year with no money, no profits. Are you willing to do that? Because the journey is long. So they tell you what is required, you know, and this is a full-time thing. You should not be doing this. Like if you want to go the prop shop path, right, professionally, then you don't have your time and attention that can distract you like a day job. So these prop firms hire, like the physical ones that I started when I was in Sydney, they essentially want you to do this full-time, and they tell you you've got to be doing this for at least a year and don't expect to make profits in that time. So if you're committed enough, right, you're passionate about this, then that's a risk you got to take and you've got to go for it. And even at the end of the day, the success rate is very low, right? Like if you're still happy to go and do that, then best of luck and hopefully you pull through. So that's how it starts.
That sounds interesting. Like the thing that to catch the passionate trader with the right and when they're able to work without having profits, like it catches my interest. You see, because it's really interesting. Like who for God's sakes will agree to work for free in this world? Like I'm asking myself, like honestly.
Because you need to see that process as training, not actually working, right? So the prop firm that I work for example, for discretionary trading, there are prop firms that pay a salary. These firms, different type of traders, algo traders, they might hire programmers. You know, a lot of them might hire uni graduates that have computer science degree. So they play a different game. You know, they're actually programmers that write software to make money. Whereas I feel like the traders that you guys would come across or you talk to are click traders, right? They develop a system, they look at charts, and at their discretion, they'll execute. Okay, I feel like that's probably the traders that mainly will be watching this or listening to a podcast. So they will need to see this as a learning experience, right? I was clicking myself, you know, but with whatever resources you have available, unless you're born into richness. You've just got a ton of backing that is happy for you to use that money and risk it. A prop firm is where you go to get educated to be a good trader. So that's where you would be happy to go in, because you're taking this as a learning experience, and you don't come across this all the time, right? Say how when I got in, it was an ad on a job-seeking website, recruiting trainee traders, right? And for example, people that will respond to that ad, maybe 1,000 people will respond. Then they'll select maybe 200 people to do a phone interview. Then maybe 20 people will be selected to, or 50 people do an online assessment. And if they pass this online assessment, that takes a couple of weeks, right? Then they'll invite you in-house to do an interview, and then they'll select maybe 5 to do in-house training. So that's when I go to the firm every single day for whatever hours that correspond to whatever market you're trading. Then they give you training on screen, right? Provide you mentoring and all that. That is the value that you get from the time that you spend doing that, and they need people that are committed, because it costs the firms a lot of resources to get you from point A to B, right? And for people that can't commit to that time, don't see that as a learning experience, and they're looking for a job, then the chance of success would be a lot slimmer. So this is why.
This is crazy. This is crazy. Actually, this is crazy. So
Yeah.
after all this time that you gone to the prop firm each and every single day, you showed up. I would love if you could tell us more about of your trading experience in general. Like, what have you learned over the course of the years that you're training? You're training for 12 years. This is not a short period. And right now you're even managing your own company, which is like incredibly exciting. But before that, we're going to be talking about like where you're going, what you're doing nowadays. We would love if you could like expose us with like the best trading lessons that you have learned over the years, because you got some incredible background.
I would say there are many, many lessons, and right, and
Give
you'll
us three.
absorb. Yeah, okay.
Give
Well,
us
look,
three.
3
At
things.
least 4.
We'll start with getting to know yourself, because why does 95% plus traders fail in the long run is we're built differently, right? Like everyone reacts differently to different situations. Your risk tolerance is different, and the way you approach your emotions and how you control it, that's very different. So I feel like over these years, the best thing you would get out of it is knowing yourself. Then after you get that, right, and you know that, okay, well, look, I'm risk adverse. I don't like to go into a lot of trades. Then, okay, well, then now you develop a trading plan that suits you. Because some people don't like to be clicking all the time. They might not be able to think on the fly and be able to react and do all those things. So what people got to know is like, yes, you want to be a trader. Okay, well, what type of trader? Are you going to be a longer term trader, shorter term trader? You want to do a click trader, or do you want to be a programmer?
And how does it relate to like actually knowing yourself? Like if I do not know myself properly enough, does it can influence my trading?
It definitely will. And how it's going to translate is as you trade, where your losses are come from is because you don't know yourself enough to have a system that is suitable for the way you react, the way you see risk, and the way you go in and out of trades, right? Because if I gave a trader who's very impulsive and likes to always be in the action, a plan that's very slow, they might not be disciplined enough. Discipline is another thing. That do you have discipline, right? If you don't, I'm sorry, you're going to have to develop that, because I feel like that's in every trader. You need to be disciplined too. If you have a plan that you've already designed for yourself, you need to follow that. Because the moment you break that, your bank is going to be breaking. You know, that's going to break. That's the one thing that I feel like a lot of traders, they don't become successful, is because they're lacking that. Simple as that. And some people just have it, some people might develop it, and some people just can't, right? Even over a long period of trading, they might not be able to develop the discipline to follow their rules, just because they're very impulsive. They have a gambling mentality when they go into a trade, which I feel like it is something that a lot of traders need to approach trading like training to be an athlete. It's not day one. Okay, I see all these successful traders there, right? Especially online these days, you see all these people that has videos with
Yeah,
Lambos and all that, right? All that
it's
glamour.
crazy
But
what's happening today.
that's
It's
right.
crazy.
So not, I can tell you it's not like that. The process is like you're training to be an athlete. You need to find all the attributes that make you, choose that path. And then you got to train up to it. And if you're thinking about that gold medal from day one and you want to get there in the shortest amount of time, well,
Nowadays with the
chances are
Olympics,
you're
nowadays
focused
with
on
the
the wrong
Olympic
thing.
Games, we every single time we have free, we're thinking about the gold medals.
That's right. Yeah. So it's okay to keep that in mind. Look, I want to get to that gold medal in the end, which means I want to be a successful trader. But you just got to know the path from who you are now. If you want to be a professional sprinter, runner, you need to understand that process is going to be hard, just like training to be one, right? So don't expect to do that from day one. And if you're just focused on that and not focusing on the process, then you're kind of setting yourself up for failure, right? So I think that's the other thing. So you need to have the right mindset. So once you've learned who you are, right? And who you are takes a long time to learn. You'll be trading, like first day, I'm not going to say learn for half a year, then start clicking and trading. No, you can easily get a demo account or put a small amount of money in whatever account that you want to trade with, right? And start practicing with very, very small risk. That is also a process of you learning yourself, because then okay, well, I've looked at all my losses over the last few months, and these are the ones that I lose a lot of money on. Why? You need to think about that. So you need that trading environment to learn about yourself. So you don't get that from the get-go. The whole process of developing, you learn these important things. So, right, then you need to be in the right mindset. That would be the second thing that I think is most important. If we're going for 4, then the third one is once you've got the first 2 kind of down pat, you would have already developed a system, or you should have developed something that, okay, this more or less works most of the time, right? So your trading system, what do you want to trade? What exactly, you're trying to aim for each trade, where your stop loss should be, and you refine that. That is something that's your trading system, your game plan. If you go into a game with no game plan, then you're going to fail, right? Because the markets are not going to give you luck all the time. Yes, you can get lucky here and there, but you're essentially competing in the markets for money with all the other participants. So how do you give yourself an edge? You need to have a game plan that can beat.
That's a good question. That's a good question.
Yeah, so the markets, you need to think that the markets are out to get you. If you fail in your preparation, in your execution, all that, it's going to take your money. So that's how I see it, right? So once you have that game plan, you'll start executing and hopefully you start making money. Now, the fourth thing I feel like the most important is adaptability, right? Once you've got all that, the market's always going to change. It goes through cycles of different things, interest rates, economic conditions, daily, like whatever you're trading can change from very big volatility to no volatility and anything in between. So you need to now know that, okay, well, how do I adapt my game plan? Or do I create multiple scenario game plans to approach the market whenever I want to trade? So that adaptability is going to give you the long-term survival. How do I not just be able to survive, but how do I thrive then in different market conditions, right? Make the most money, choose the best trades, trade smart. Something about trading is, I really believe, is you need to trade smart and not just hard. Yes, it's hard as well. You're going to put in the hours, learn the game, but at the end of the day, when you become a successful trader, trading something that can be scaled, right? You're not aiming for a small amount of money all the time and you have to make X amount every day, because some days the conditions are not right for trading. You should know in your game plan that, okay, a day like this, when the price action is a certain way, I shouldn't be trading. I'd rather go and like have a drink, right? So all part of that you should have developed at the end of the journey. Well, it never ends. You always adapt. You keep going, right? That adaptability keeps going. Yeah.
So actually, I would like to ask you some more deeper questions within your trading. And uh, you see, there after 12 years of trading, you have might see like multiple strategies and like so many people that things in different ways and so many people that approaches the market in different ways. Now, what I actually want to ask is, if you saw a strategy or a trader that have discovered an edge in the market. Now, before we'll dive deep, I would like to explain what an edge is. An edge is like when the market's it's volatile and they're going up or down for a long period of time. The strategy or the trader is still making money. Now, after you saw strategies that have an edge in the market, and after you saw traders that have an edge in the market, um, what specifically, differentiates the strategy or differentiates the trader from the rest of the people that don't have an edge?
Well, I think the most obvious one would be the person that has an edge is going to make money, and the ones that don't, they might get lucky here and there, but in the long run,
Not consistently. Not
yeah, it's
consistent.
not going to be consistent. So how do you become a long-term, consistently profitable trader is you need to find where your edge is. And that can come from different things. That can come from the market you're trading in. That can come from how you execute, right? Like how do you manage your stop versus the profit potential, right? So
What do you do to remain consistent?
you need to have a game plan that you know like the back of your hand, more the front and the back of your hand.
Let's talk about the game plan. All right, let's talk just about the game plan.
Yeah.
What the game plan should be including in order for you, Daniel, to have a consistency within the markets. Last 3 days we saw the Japanese yen, and what have happened, and like that was crazy.
Yeah.
How do you adapt yourself to your game plan, and how do you solve like the entire issue with like the understanding and the consistency and the edge within the game plan?
So that's a great question. I think firstly, yes, we see this crazy volatility in the market. However, that doesn't mean it will affect everyone's strategy, right? So for me, for example, I make money in volatility. However, that whole event may not benefit me if that's not part of my game plan, right? I don't have a scenario to extract a lot of money out of that, as an example. So what is going to help you adapt is you need to factor in, and this comes from a lot from experience. Like, okay, something like yesterday or the past week happens, right? In your game plan, what happens if you carried it out to the T in that environment, in those days? Like, what would have happened? And if it means you've been wiped out, then you need to know that, okay, what do I need to change for my strategy to work in that kind of environment? Or should I be
So
stepping back and not touching it?
it's more of I just wanted to understand and
Mm,
to enable the audience to understand.
mm.
It's more of a process of adaptation, or what is
Okay, it's
okay.
both. It's knowing what the market can throw at you. Okay, as you're trading, days like that is going to teach you on screen what the market can do. And days like that is rare, right? And
Yeah, it's
what
rare.
happens to a lot of traders, if they don't have enough experience, and maybe they've had a successful, I don't know, maybe even 6 months of trading, right? And one day like that, if they don't have something in place that can stop them from losing money, or and then they step back and they go, nope, I don't have a scenario for this. I won't touch it. They need that discipline to know when to execute that part of the game plan, is to step back and do nothing, right? And in their original game plan, if they had a stop loss, for example, a hard stop for the day, that would stop you from going in the last week, doing your normal thing, and then lose all your money potentially. So
Hmm.
the game plan is developed over time, over different market conditions, and a lot of that is from experience. So the shortcuts that you can get at the beginning, yes, can be you look for, you look at books, you find the right indicators, you find the right instrument that's good for your whatever you want to trade, that's active at the right times, and you go from there, right? And then I feel like doesn't matter how many books you read, and it doesn't matter how great you think you can design something just from the things that you've learned. You need to learn the rest of it. At least the other 50% is from markets. You need to be trading. You need to be looking at news, events, charts, movements. I think you absorb the rest of it from there.
So many things going on. This is crazy.
That's right. Like, so this is why it's a difficult game. Like, it is not you sit down and next minute you have a Lambo. No, it doesn't go like that. And I can almost guarantee to say, like, successful traders all have to go through that process to be consistently profitable in the long run. And they work things out right along the way to say, okay, well, why did I lose money today, right? If they had a stop loss, that would have protected them for anything above the stop loss. And then hopefully then they come up with a new part of the game plan that goes, okay, next time that happens, I know what to do.
Mhm.
And not only can I not lose money, maybe I can have a extension of the game plan that goes, I can make money off something like that, a move like that.
An extension of the game plan.
So you're
Like to have
increasing.
like a more ideas, but does it make you more impulsive like to have an extension? Because
Well,
if you have an extension, you
you
develop something over time, like out of your experience, something.
so
I
it
think
needs to
I can
be
hear the traders.
it needs to be something that you can handle. As in, if you're a person that I can't react quickly enough to spot what's happening, and okay, I need to pull up now this part of my game plan to execute, then it's better
Hmm.
to stick with a simpler one and go, okay, I'm stepping back now. I'm not going to, if I've stopped out for the day, I'm not going to trade anymore. I don't have a game plan for this situation. And I will wait until it's all fine again. It's back to my normal trading conditions. That
Yeah,
may be the best scenario. So for people who are always looking for an edge, always like thinking that, okay, like, well, that was a huge move. I should have made money off that. However, if that's not covered and predetermined in your game plan, I would advise not to do anything.
hmm,
Yeah. Because that could be your ruin, right? If you're impulsive and you go, okay, these moves are huge. Had I bought there or had I sold there, I would have made a mozza. Well, those thoughts need to be controlled if it's not part of your game plan.
It's essentially a
Um,
dopamine hit. I mean,
Yeah, it is. Looking at the markets, looking at
yeah.
those kind of moves, it's always going to tempt you into something, right? It's always going to say, look, that is a massive, normally the market moves, say, like 10 ticks for the things that I do. And that just moved 100 ticks or 200 ticks. Like that could have been my whole month made in like an hour, right? If you start thinking like that and you're tempted to get in, well, you better have a very solid plan to get into that. Otherwise, like, yeah, my advice is like, just don't worry about it. The markets are always there. The money is always there to be made. What you should be focusing on is how do I not lose money in that environment instead of how much money can I make? Because, you know, like I said, the focus of what you're trying to do is very important.
um, I get it. Um, really interesting, the thing that you're saying here, because, you know, those are things that have been said from experience, out of experience. And, you know, when you're talking with an experienced trader and non-experienced trader, like the differentiations between like the both answers are incredibly high. Like, this is different. This is
Mhm.
different. And I can
Oh, I'm
understand
glad I
two
can
two or
contribute.
three things that I have couldn't understand from from a regular conversation with just a not professional trader. So right now I'll pass the mic to Alan, and we would like to continue our discussion about like what do you do nowadays? Like right now you're founding your own company and so on and so forth. And Alan got something to ask you. So Alan,
Yeah, I
yeah.
have a good question.
Go on.
In your current company, what are the biggest challenges you have encountered over the years, or more precisely over the months? And how did you overcome them?
Well, if we're talking about the company that I founded,
Yeah,
what I'm trying to do, right? I'm trying to create something that aligns with my experience, right? In trading. What trading essentially is, you can see that as a very professional way. I'm skilled in a particular field that can make money. Now, what's an extension to that, aside from trading every day, right, and making money, what else can I do with that? So now I've created a company that allows me to bring something like that into the investment space. Now, like I said, I work for proprietary firms, and these are all closed private entities. Okay. So, and you look at what, yes, there's a lot of investment options out there these days, but how does one then vet out, okay, how much risk? There's a lot of ads for products and such online. So what I want to create is something that I can allow people to invest in around the world that is to do with what I do.
Hmm.
So the process requires like understanding, okay, a lot of things, right? Firstly, I'd say I have a good understanding of how trading works and how money is made in that system. And then you need to understand the investment world, what products are available, how that works, how the regulation works. And then you put that together, and I'm creating a product that allows people to get in that they can also accept, right? You can't just say, okay, well, the money is just going to go into trading in whatever system and without letting them know what the risks are. So I'm trying to create a product that is very, very low risk with some of the strategies that I've got and some strategic partners that I have. Essentially, the company is going to put those together and create an investment product. And as you know, trading is very liquid. We get in and out nearly every day, right? So if you're able to use that concept, I don't need to lock investors' money in for a very long time. I've got something that works on a day-to-day basis that the risk is so low that over a short time period, if you draw an average, the line is going to be very linear, right? There's no crazy drawdowns and such. So that would be like competing with, I wouldn't say it's not the same as like, say, a term deposit. But what I want to compete in is that space where there are people that they have no idea about trading, right? They don't look at a lot of other investments, or they might not know how to do that. So they just leave their money in the bank, right? And they just take a very small amount of interest that the banks offer them, like 4%, 5%. Now, if I then can create something that's basically near zero risk. And how we do that is using things like arbitrage, which essentially means I can buy and sell something at the same time. And essentially, I don't have exposure to the underlying. If I can get a cup, and right now I can buy it for $1 and I can sell it to someone at the same time for $1.10, then I really have no risk to the underlying thing. So it's strategies such as that, right, that I want to put in to for example, what I do as well, I've got strategies that essentially, if I execute the same thing every day, the risk is super low and the chance of success for that specific trade can be like 99%. So I extract all of those. And like you, Afek mentioned before, like how do you find the edge? Well, there are things that have a lot of edge and there are things that might not have, right? And when I say you should select
the
the right
discovery
times to trade,
is incredibly hard.
Yeah. Well, once you've worked that out, that's the thing that's going to make you the most money. Not trading like many hours a day, but once you scale to a certain degree, you only want to do those. You only want to sit there and look for those. Yeah. So basically, I'm extracting all the best bits, the best of breed of different sectors, and I'm rolling that into a product. Okay. Now to make that, yeah. So, but at the same time, right? When you mentioned before that some traders can make 300% a year, right? Yes, that may be. However, how much of a drawdown do they take? How much risk do they take, right? So if I take away all of the ones that are riskier or can result in, drawdowns, and I only limit it to the really small drawdowns, but decent performance.
I'll ask you this.
Yeah.
Why do I even care how much drawdown the trader have? And by the way, it personally it takes my interest. If the trader makes 300% each year, year by year, why do I care about his drawdowns, how much risk he's willing to take? Please.
Because over the long run, if the drawdown essentially means your stop loss. Like, do you have a stop loss?
Where you're messing with the platform, you need to be aware of the rate of the
That's
drawdown.
right. Like, how else can a prop firm manage their risk and assess how good a trader is without that type of risk management? So the drawdown is very important because if you draw down today, say 10%, and you draw down tomorrow again 10%, and the next day 10%, then the prop firm might say, okay, well, you're only able to stop out 3 times maximum, right? And then the risk to that prop firm is like 30% of what they allocate you max, right? As the amount that if you say they give you $100 and your daily drawdown can be no more than $10, then it'll be like a $10 drawdown. It's a calculated risk. So why you do need to focus on that is because if I gave someone money and I go, okay, well, their previous year, they got 200, 300, 400% return. But what is going to ruin their account? What is going to trigger something that makes them lose all their money? This is why people need to look at drawdowns, is because like, how risky is your strategy?
Sounds interesting. Now I'll ask you last more thing. I would like if you can, tell me one short code that you remember that sticks behind of your brain and follows you for the entire trading career. One code, one thing, one sentence, one lesson. In one short sentence that our audience could take from here.
Mm. One thing. Um, wow, that's a difficult one because there's so much to do with trading that there's a lot of ones that people know, like trade with a trend, the trend is your friend. But what I would say is trade with your plan. Your plan is your friend. Because if you've got that down pat, that means you would have gone through a huge process of wrapping up everything to do with a successful trader, right? You've learned yourself. You then have the right mindset. Then you've developed that game plan or those trades that you need to take on a daily basis, and you know how to follow it to the T, right? Which means you have the discipline to. So if you've
Mhm.
developed a game plan and you're able to follow it through on a daily basis, then I think
Yeah.
you're most of the way there. So what I would say is trade to your game plan.
Sounds incredible. Yeah, well, gameplay was one of the best topics that we have discussed. So, Daniel, me and Alan want to thank you for your time. You have spread here an incredible lessons that I personally can take to my experience, and I'm sure that our audience could take from here, like to start actually use it. So I will attach in the description of the episode all the details about Daniel, so you can read and learn more about this incredible guy. And I had the
LinkedIn
pleasure of meeting
website, by
you
the way.
today. Thank you for coming here. Um, we're so honored to have you here. And by the way, in the future, we'll have you here again for part B for our incredible conversation with you.
For sure.
Um,
Thank you for having me.
so thank you for being here. And we'll talk. Thank you. Bye bye.
Bye.
Thank you, Daniel.